Every 6 weeks, one acronym dominates every news headline in New Zealand. It's the OCR announcement. If you have a mortgage, you're about to get one, or you're just refixing, you need to know exactly how the Reserve Bank's official cash rate affects your bottom line. And with the next big announcement coming up next Wednesday, November the 26th, now is your time to get the strategy sorted. So let's break down simply why the OCR is the master switch for your mortgage. The OCR is simply the interest rate the Reserve Bank of New Zealand charges commercial banks for overnight lending. Think of it as the price of money in our financial system. The RBNZ uses this rate as a tool. It's like a lever to control inflation or the temperature of the economy. When they cut the OCR, they're signalling to the banks to make borrowing cheaper, which encourages spending and stimulates a sluggish economy. Conversely, when they rise the OCR, they're making money more expensive to cool down an overheating economy and to help fight high inflation. Now here's how it hits your mortgage. Floating rates are tied very closely to the OCR, so they move quickly. But fixed rates, the 1, the 2, 3 year terms that most Kiwis choose, they're a little more complicated. They're primarily based on the wholesale money market. So the wholesale money market is essentially what the banks pay to borrow the money that they lend to you for the longer terms. And guess what heavily influences the wholesale rates? Well, it's the market's expectation of where the OCR will be in the future. And this is the key distinction. Banks don't set your fixed rates based on the OCR today. They set it based on their prediction of the average OCR over the fixed term. And that's why you often see banks change their fixed rates before the Reserve Bank makes its announcement. They're trying to price in what they think will happen over the next 12 to 36 months. So they're playing the long game. So what should you do before November the 26th OCR decision? Well, you need to consider 2 things for your mortgage strategy. Review your term strategy. If the market is predicting a drop in the OCR down the line, you might want to look at a shorter fix or a split mortgage to hedge your bets and capture lower rates later. If you value certainty in a volatile market, a longer fixed term might offer you the security you need right now. It's important to get independent advice. Don't just watch the news headlines on the 26th. Don't just get on a Facebook group. Get in touch with an advisor who can give you independent analysis of what the decision means for your specific situation. We look at every bank's forecast, not just the headlines. So are you ready to turn those confusing OCR headlines into a clear mortgage strategy? Give your broker, that's me, a call to book a mortgage strategy session today, and let's get you prepared for the next wave of rate changes.
Loan Market. Make it yours.